Dan, what was the read-through from Uber?
Look, Armageddon-like expectations coming in, and I'd say it was probably the strongest quarter they've had since going public. EBITDA, profitability, rides look strong in terms of the recovery we're seeing. It looks like finally Dara and company has Uber on the right path, and that's what you're seeing reflected in the stock. I continue to think this is really the first step into what's going to be a new Uber strategy going forward.
And what about the price? Given you said Armageddon-like expectations, we're seeing a big jump today, up 18%. Do you still think it's a good value?
I think value. I mean, our price target's 38, and you can start to justify the stock into the 40s as that EBITDA profile continues to increase. And also, it's about rides. I mean, right now, I think they were sort of early in terms of, from a strategy perspective, cutting costs, starting to rationalize, and now you're going to start to see the benefits. And I still think this is an under-owned stock on the street. Obviously, it's been a disaster if you look back the last few years. But I think it's a new chapter for Uber starting today.
Peter Cicchini joins the conversation from Axonic to take it a little bit broader. And Peter, how do you read some of these earnings reports, which do speak to solid demand? Uber's doubling of its revenue thanks to strong ride sharing. We had some positive demand commentary from DuPont, from Marriott. How does that fit into your, I would say, negative view of the overall equity market?
Recency bias, because if we look at the earnings season overall, it's certainly been a mixed bag on the demand side. And in fact, you know, if you look at Kimberly-Clark and some of the industrial companies, they're actually saying that we're seeing unit volumes fall on the higher prices. So, you know, Uber, I think, perhaps somewhat idiosyncratic, but mixed bag at best. And a lot of companies have actually lowered their expectations coming into the earnings season. And I think the next catalyst for equities, lower that is, will come from guidance as the quarter progresses and higher prices and their impact on demand starts to bleed through to unit volumes, and that's going to force a lot of companies to guide considerably lower.
So you're not convinced on the earnings story. What about the new geopolitical risk? How should investors think about what's happening right now between the U.S. and China?
Yeah, I mean, you know, the tensions between U.S. and China, especially with respect to security issues in the South China Sea, are nothing new. If you remember, you know, Newt Gingrich took a trip during the Clinton administration to Taiwan, and that upset them. There are some big differences now, however. China is, you know, preeminence in the world. Has grown considerably. There's a lot more trade that goes through the South China Sea, and Taiwan now accounts for about 50% of semiconductor production. So I think that's important. I think that's in the background and is a longer-term driver of potential tail risk. But, you know, sort of in the front view right now, the Fed obviously, as well as, in my view, margin compression that's going to take place almost inevitably. And guidance is showing that. Companies have been guiding lower.
Dan, you don't agree, do you? You're positive on a lot of what you're seeing in technology.
Well, and also I think there's two individuals, Nadella and Cook, that disagree with that statement as well. I mean, because if you look last week, they could have easily ripped the Band-Aid off. Yet look what you're seeing in terms of clouds and the demand story that's holding up. Look what you're seeing from Cupertino in terms of strength, even coming out of China. And of course, FX is an issue. But if I look across the board, you know, especially given some of the negative expectations, it's been much better than feared. And that's really across big tech. And I think that's why you're starting to see more and more of a risk on. And some of the haters, they'll continue to hate on tech. But I believe second half, tech stocks move higher.